Let's bring in Fast Money friend Gene Munster. He's managing partner at Loop Ventures. Gene, I understand you were positive going into the print tonight. Are you still?
More mixed after this, and the reason is just the magnitude that this business has hit the wall. It's quite remarkable. Last year, the business grew at 60% for their October quarter. They're guiding for a 17% decline. That is about as big of a slowdown as I have ever seen. And the reason, of course, is because gaming, they're flushing out inventory. Gaming is code for crypto because that's where those sales go through. And so this is part of the hangover of crypto. And the piece that has shifted, and some of the traders have been commenting regarding this too, it's rare when you see these big slowdowns. It's rare that the business bounces back in a subsequent quarter. I think at a minimum, investors are not going to expect the business to bounce back in the January quarter. And what that means is the stock probably isn't going to do much between now and then. I do stay generally favorable on this for, of course, all of the major tailwinds that are behind it. I want to point out two. One that is a technical tailwind, which is the easy comps. The pain of the October down 17% is to the gain of investors looking more optimistically about growth a year from now. And separately, the segment around automotive, it's just 2% today in automotive and robotics. I think that can be about 30% of the business longer term, much bigger than it is today. It will take many years to get there. The bottom line here, Courtney, no need for further action for most people, but I think beginning of next year is going to be a good time to own Nvidia.
Hey, Gene, it's Dan. You know, your commentary, I think, is spot on here. And listen, I think we'd all like to be a bit more positive about this story because of all of the levers they have to pull in these emerging technologies over the next few years. But where I get tripped up right now, especially with the stock being cut in half from those all-time highs, is valuation. Where should a company like this trade on the market cap that it has, you know, at 14.5 times sales this year and 12.5 next? This is not where a company like this or a stock like this troughs.
Agree. And maybe to put some context around this, this is a $425 billion market cap. If you look at Intel and AMD, they don't have the same growth profile, but those are, call it 125, 130, $150 billion. This is a much higher price you pay for the growth. But there can be some sort of a reckoning. Again, I'm thinking that there's no need for further action in the near term. And the bigger question I'm asking as we get to that point of next year, what's the fundamental question I'm going to be asking is how strong are those tailwinds? I think they're strong. But to your valuation question, Dan, is that historically, these companies have not withheld the test of time. Historically, chip companies have come and gone. There are changes in chip architecture. Just ask any Intel investor who has held the stock since 2000. The stock is up 28% since then. That's an example of a changing guard. Nvidia during the same period was up 7,000%. And so I think you need to be cautious. I'm not at a point today to answer that question about the changing of guard. I think Nvidia still is in a great spot. But that ultimately is where the valuation question comes down to me. If they can keep growing at 60%, stock's cheap. If it goes to 30, 25%, it's overpriced.
Gene, any read-throughs here before we let you go on some of the other competitors? If this one has a much richer valuation and you're paying up for growth, are there other names that we should sort of be paying attention to now that we have full details of Nvidia's quarter?
I still think Intel is attractive. There's some favorable pieces to it. They have a lot to do around building this fab. I think this whole onshoring theme is a multi-decade piece, and I think Intel is in a relatively good position around that.
Interesting stuff. Gene Munster, always love having you on. Thanks for the quick reaction.
Thank you.
Let's take this around the horn. Tim, I'm going to go back to you. What do you make of what Gene had to say here? He's not really fully out there ready to make a new call, but he did say he's mixed, and going into it, he was positive. So not thrilled about what we got in the details.
Yeah, and as I would expect him to be, very consistent with a view that this is one of the most important companies in the world right now, and that this is they are running into some of the same headwinds that other companies are. And this is a case of you really are running into some demand on the gaming side. But it doesn't change the fact that this company is so well positioned in leading edge technologies. The reality of, I mentioned 37 times forward, that's really before you get a lot of the downgrades. For example, JP Morgan recently, after that July warning, downgraded the stock 560 in earnings in 23 down to 380. Those kinds of numbers mean that the valuation gets that much more expensive. If you're trading the stock, to me, it seems like your collar is somewhere around 150, which was the downside of where we got to, where it does look like there's support that even goes back to kind of some of those run-ups in the crisis. But really, it fell apart at 180, and that's where you run into the 100-day, and that's another place where I think the stocks, until you break on the upside north of 180 or below 150, I think you stay out.
Okay, well then we are right in the middle of that trading range for you right now.